All right, welcome back to the Weekly Rebalance. We're back in a new year, 2026, ready to go for the new year. You ready, Nick?
Yeah, let's dive into it.
Yep, sounds good. Well, we're talking about the geopolitical events, not just what happened recently with Venezuela and some activity around Greenland, but we're going to talk about how markets react to those things and some research of the week, putting some of that into historical context. So let's dive in and discuss. We were as we were preparing for this, the end of the year, we had a number of episodes where we were focusing on year-to-date returns and forecasts for 2026. So not much has happened in 2026 thus far to really assess equity markets except Venezuela. So
Yeah.
what's been going on there, Nick? What's your opinion and how have markets reacted to what happened in Venezuela?
Yeah, I think it's a really interesting story. I feel like most people were surprised Saturday night or Sunday morning when they found out what had happened. It was shocking how quick it was. And honestly, just taking a step back here, you can think of the operation what you will. Was it right? Is that the right stance for the United States to be taking? That sort of thing. But just how impressive it was that they kidnapped the president of a foreign country in like how long was it? Like 30 minutes?
Yeah, pretty
Like
crazy.
just crazy. They just turned off their defense systems in a foreign country and just like snatched the president. That's pretty crazy.
Yeah, yeah,
So,
exactly.
so a very successful operation. And I think that in part lends itself to the market reaction because I think a lot of times when you see something unexpected like this, anything that's potentially increasing geopolitical risk and heightening it from the level that were already at, typically that would be a risk off environment for just about any asset. I think any risk on asset is probably going to suffer. You're probably going to see a lot of gold and silver activity, and defense stocks are going to do well. But for the most part, I would consider that to be a risk off environment. And we kind of saw the opposite, which I think ties into the success of the operation, at least in this stage. Now, like the United States track record with regime change and affecting that in a manner that works out for all parties very well is very questionable. But at this stage of the game, it was a very successful operation. And so I think in part that's what led to the market reaction that we saw because we saw a risk on environment. In fact, in one of the slides that I have here ready to go is the Bitcoin reaction to the announce of his capture. And we saw Bitcoin soar, which typically risk on asset. Now, I think there's an interesting tie with Venezuela in particular that we can get into later. But, risk on asset, Bitcoin performing very well. And then on Monday, we saw equities rally notably, and that continued into Tuesday. There were a few stocks in particular that benefited more than others, but just a risk on environment in general, while we also saw gold and silver rally for pretty clear reasons as the geopolitical risk increased. So,
Yeah.
long story short, I think I got a little bit off track there because it's
That's
been an interesting couple weeks or
it.
interesting weekend. But
Yeah, weekend and start to the week so far. Well, yeah, you're right. The S&P rose on the news. The Dow Jones rose, the Nasdaq rose. It was in, like you said, as a risk on trade, but we also had some of the typical risk off or those kind of hedging strategies also do well. Gold, silver, being the ones that I'm thinking of in particular. So it was an interesting move. And you're right. We saw some stocks in particular, energy stocks, do very well that day. Your Chevron's obviously been a big focus because they're active in Venezuela already. But the other names as well, Schlumberger, Halliburton, Baker Hughes, all of those type of names did very well off the news that they have a new pipeline for Venezuelan oil. The only thing I wanted to, as I looked at that, I think it makes sense that there's a bid for those, but at the same time, there's a lot of development that needs to take place in Venezuela for them to be able to truly take advantage of that. I think the Trump administration cited 18 months. That would be, in my opinion, quite optimistic. to have the build out done
Yeah.
for the energy infrastructure needed for those companies, you're probably talking about more like 2, 3, 4 years, if not even longer, for full build out. So, the market tends to price these things pretty well, but definitely a little bit of excitement that potentially was a little bit overblown there in the first day.
Yeah, I would tend to agree there. I mean, we've got a long ways to go for ramping up production. And in addition to that, billions of dollars of investment.
Yeah,
Just, can't overstate the amount of investment that's needed to get production to where a lot of the people, I think, piling into the market were kind of expecting it to be. So
yeah,
definitely an interesting one. And I think, too, your point about Chevron in particular rallying for obvious reasons. They've got basically they're the only U.S. oil company that's licensed to operate in Venezuela. I thought that was interesting that it was so pronounced for Chevron
yeah,
because obviously they've got a head start there. I would imagine that the administration would favor them for kind of leading the charge on that. But in my mind, potentially you've got more entrance into that space, especially if the United States is taking over in effect for a certain period of time. You would think that they're going to allow other oil companies to operate in that space in order to increase the speed of being able to produce that oil that people are looking for. Um,
right.
it would be most expeditious for them to include other companies in that. So I thought that was interesting that we kind of saw Chevron in particular rally, which makes sense, but we saw some of the other names, maybe not so much. They didn't rally quite as much. Now, Halliburton, I think, is interesting because, they make a lot of technology that's used for drilling. So that one's pretty clear. And I think that one's actually, I think that's probably the one that I would have been flocking to first because it's very clear that there's going to be a lot of investment that needs to be made in this
Right.
space. Um, but yeah,
Yeah,
that was
totally. But nonetheless, definitely a risk on trade. The other event or newsworthy event that's been covered the first week of the new year has been Greenland, and that's an interesting one from what I've seen. Not really a market reaction there. So kind of the opposite of the Venezuela instance, where have you seen any tie to the markets, from the Trump administration commenting on their desire to take over Greenland? And why would they want to even take over Greenland in the first place?
Yeah, both of them
Maybe that's
are
the first
interesting
question.
questions. Yeah, so I think the first thing would be I don't know that we've seen a market reaction explicitly or anything particularly tied to Greenland. I mean, we've seen risk off assets or gold and silver have performed very well, and theoretically you could tie that to increased risk of Trump invading Greenland, and then you've got a problem with NATO, and because NATO came out saying that the United States cannot take over Greenland or else they're going to get involved, and that's obviously going to cause some problems. So
Yeah.
for right now, it seems like the markets aren't taking it very seriously, but a lot of countries around the world and international organizations are taking it pretty seriously. So I find that interesting.
Yeah, I do too. I mean, to step back really quickly, the reason being the U.S. supposedly wants Greenland for access to its natural resources, and the threat that countries like Russia can easily they don't have a great missile defense system for over the Arctic attacks is basically how I understand it. That being said, I think you're totally right. The markets are not really taking that seriously. I think we'd see a lot more moves, potentially even in the bond. Like if we were going to have a sale of Greenland, that's obviously going to have to be financed by debt.
Yeah.
So I would expect a lot of moves in the bond market with potentially yields rising quite dramatically as the
Yeah.
US takes on the debt to buy Greenland. I mean, that's just uh, I think equity markets would be volatile. Defense stocks would probably do great. We'd probably have a risk off environment, would be well, I guess who knows? I mean, you never know, but I think the markets would react nonetheless. Um, that's that leads into, a segue into some of the conversation for our research of the week, which is just looking at some of this historical context because, you know, you were mentioning earlier Venezuela as a good example. The operation, whether you agree with it or disagree with it, doesn't really matter. It was over pretty quickly. Now,
Yeah.
we hope that it stays isolated to this regional conversation, and it's done, and there's no more, risk of it spreading to a more global event. Uh, Greenland, right? The takeover of Greenland, we've already heard NATO saying that they would get involved. You know, again, anything that is geopolitical in nature, it tends to normally have a risk off sentiment. In most cases, Venezuela is an example of the opposite,
Yep.
but in most cases, you have a precautionary stance after some type of geopolitical event. However, most of the time, those events stay regional and are pretty short-lived. And in the case that they are not, you're talking about spreading to a much more global event, in which case now all of those bets are off, right? You're talking about the world wars, much more involved events, which are much more serious. But on average, most geopolitical events are, they trigger some precautionary behavior to start, but they're often muted and short-lived for the most part. Would you, was that what you found as well?
For the most part, that's what I found. And I think the other interesting thing that I noted when I was looking back at history, trying to find a good comparison, it's really hard to find like a one for one good comparison to draw for this one in particular. I
Yeah.
going back thinking about it, the ones that jump out in my head would be the assassination of bin Laden. That one was, pretty successful, very quick. Um, but probably not as directly tied to that because that's not the leader of a nation. He's
You're right. Right.
essentially a terrorist. So not as economically tied as more of it's just a military operation that needed to happen. I guess in theory, you reduce the probability of future terrorism, at least from that individual in specific. But the other one that I looked into, and actually on that note, when I looked into the market reaction to the assassination of bin Laden, I think that the market was down the following day. So I don't think that there was a direct correlation or anything like that to the market in that instance. The other thing that I took a look at was the invasion of Iraq in 2003, and then
Yeah.
the capture of Saddam Hussein in December of 2003. So that one I feel like is more similar to what we saw here. The only, or really the big difference being they invaded Iraq in March of 2003 and they captured Saddam in December of 2003. So there was a 9-month stretch where they were operating in Iraq. The market reaction to the invasion of Iraq, and I've got a slide here I can share.
Yeah.
The day that they invaded Iraq, the S&P 500 was up 2.3%. So I think sometimes when the U.S. is getting more involved from a military perspective, there's a lot of companies that can benefit from that. Defense contractors, oil companies as well. Those two things tend to do very well, and it can create positive performance for the market. Now, the thing that we see is when they captured Saddam Hussein, the market really didn't react to it, or at least I wouldn't think that this is related here. This negative 0.57% of the S&P 500, I tend to doubt that that's related. But the invasion of Iraq, the S&P moving up 2.3%, I'd imagine that at least a portion of that it could be attributed to that invasion. So I don't know. Looking back on history, it was just I had a hard time finding a direct comparison in this case because of how tied in Venezuela is to just the global economy. I didn't realize this, but Venezuela's oil reserves are valued at basically the same market cap as the Magnificent Seven combined,
Yeah.
which is
Wow.
just insane to think about. So again, that's a huge implication there. I think another thing that I noticed looking into Venezuela in particular and the Bitcoin reaction, Venezuela is one of the biggest adopters of cryptocurrency as a whole. They were number 13 globally in crypto adoption, largely because of the amount of inflation that they have. So I think in
Right.
December of last year, they had inflation of over 500%. So a lot of the locals are already buying crypto, even though it's kind of limited. Their access is a little bit limited through U.S. institutions having embargoes on Venezuela, that sort of thing. Even with that, they lead the way in crypto adoption. So potentially, citizens of Venezuela were rushing out of the market to get out of their local currency, since
Yeah.
that seems to be their solution. I think a lot of them are buying USDT,
Okay.
but in addition to that, Bitcoin. And then there's also speculation that I believe, yeah, $60 billion shadow reserve of that Venezuela holds in Bitcoin, which would make them on par with MicroStrategy. And in theory, the US would take that over if it exists, and it basically goes out of circulation. So
Yeah.
takes out the circulating supply, potentially leading Bitcoin higher. So those were a couple of things. And just, I think that highlights the difference of the situation with Venezuela and some of the historical events. But what did you find?
No, yeah, you're right. I mean, each event is different. What some of the summary data that I found was that, the average drop after most geopolitical events is, the 1 day drop is somewhere between 1% and 1.5%. The
Yep.
average total drawdown is only about 5%. So you're right. There's a lot of events where it's hard to quantify. There's not any there's 1.5% is that can happen on any day, right?
Yeah.
Um, but it's oftentimes it's pretty muted, and the market bottoms typically and moves on. The news cycle nowadays especially is so short. So unless that event spreads to be more than a regional event, it gets moved on from in a couple of news cycles,
Yeah.
maybe a month of news, who knows, but not long. There's something else that comes up. Everybody kind of forgets about it as long as it stays regional, and markets do too. The markets typically tend to bottom about 22 days after a geopolitical event like that, and are fully recovered within 2 months. So, I mean, perfect example is, I mean, this is, it's a bad correlation to Venezuela, but it's an extreme example that most of us remember. 9/11, there's an 11.6% drop on that. That's a much more serious event with an attack on the US compared to, what happened in Venezuela. But the market was recovered in 31 days, right? It stayed
Yeah.
regional. I mean, obviously it spread to the attack, the war in Afghanistan, the war in Iraq, but all of those events still stayed fairly regional compared to, something like one of the world wars. Markets are recovered within a month, basically.
Yeah.
So it just shows you how fast those news cycles are and how fast markets reprice. And it makes it, geopolitical events in particular are very hard events to trade, is really the point. And I think if we tie this back to what are the portfolio implications, it's really don't do anything, in my opinion. Not that you wouldn't do, okay, not that you can't make a strategic tilt, and maybe you would overinvest in, overweight a little bit towards Chevron, overweight a little bit towards some of the energy stocks. That's definitely something that you can do. Bitcoin may be more in favor. There's definitely, reasons why you might tilt your portfolio there to some degree. But they're hard events to predict because you see how fast these things price in. You really want to be invested previously and just be diversified and stay invested throughout. Trading geopolitical events, there's no accurate way to predict what's going to happen in Venezuela, what's going to happen with Greenland, what's going to happen after 9/11, right? There's no way that you can predict any of those things. So the prudent thing to do with at least most of your portfolio is going to be stay diversified, balance your portfolio before, during, and after, and avoid those knee-jerk reactions to all of a sudden, for example, dump a huge portion of the portfolio into Chevron, right?
Yeah.
Not that Chevron's a bad name, but if you owned it before, like you should own, in my opinion, at least a couple U.S. oil companies in your portfolio. Chevron, Exxon being probably the biggest two from the S&P 500. You already have exposure to that, right? And that those tactical things can be done, but strategically speaking, you want to be diversified, invested, allocated, balanced before, during, and after. Making those knee-jerk reactions and trying to trade geopolitical events are very, very difficult because of how fast things get priced in.
Yeah, I tend to agree. And I mean, like you said, there's definitely a case to reposition your portfolio after something happens. But similar to what you were saying, it's key that your only stimulus or for creating that trade or implementing whatever change to your portfolio that you're going to make, it's important that that's not the only thing that's driving that decision. The event that's already happened.
Right.
Potentially that changes the long-term trajectory of some different industry, stock in specific, and then that makes the basis for an excellent trade. But if you're just reacting to that singular piece of news that's already happened, then you're already too late. So
Right.
I think that's key. And I actually have a chart here. I've got a couple of charts that highlight this nicely, I think.
Yeah.
So I pulled the performance of all the major U.S. oil companies, the price performance of their stock on Monday. So following the capture of Maduro, and saw how they performed. So on Monday, we saw Chevron up 5.52%, and other oil companies up a decent amount, and some not up quite as much. But no doubt, a positive reaction for Chevron, a great day to own Chevron if you already owned it. Backing that out into the performance from the 5th through today, actually all of the major U.S. oil companies are down on the week.
Yeah, interesting.
So again, you've got a tremendous amount of, I guess, opportunity decay with these global events, especially when they happen on the weekend. So it's tough it's tough to profit off of that specific instance, unless it happens in the middle of the day and you've got some AI algorithm scraping for news and you can react, in a split second before anyone else can. But if it changes your outlook for a segment or stock as a whole for the coming months, then by all means, it can help create a trade. But I tend to agree with you on that one.
Yeah. So would you mind pulling that up again? I just want to look at that in a little bit more detail. So you pulled up we know that the day of the event, that's what your first slide there. The day of the event, Exxon's up 2.45%. Chevron did the best, 5.5%. Those are two. Let's just focus on those two examples. So big moves for at least for one day on those two names just on Monday. If you look at the chart there, a lot of the move came early in the day, right?
Yeah, and I mean, it happened over the weekend. So your pre-market trading, people are already positioned for it. So this is the following reaction. So it's tough to profit on that position. And even if you try to do pre-market trading, volume's low. The chances that you're going to get a great price are not. It's not a great probability.
Tricky. Yeah. So then take me to that other slide again. So we're actually now, even though we had the focusing on Exxon and Chevron again, now for the week. So this is basically year to date, but so for the week now, including those big positive numbers on Monday, Exxon's now down 3.34% and Chevron's down 0.44%.
Yeah, and I think this is in comparison to the close on Friday. I'm pretty sure. I'd have to go back and check the way I set this up in Y charts now that I'm thinking about it. But I think this is as opposed to the close on Friday, but could be wrong on that.
Nonetheless, it shows you can see the chart there, just the two, because this is basically Tuesday and Wednesday. If you see those sections, you've got January 5th into the 6th, 6th into the 7th, and you can see how just there's a lot of volatility created there, right? So if you're a really good trader, maybe you can take advantage of that. But it is you better have more of an inclination for investing on that geopolitical event than just that geopolitical event in itself. Perfect example being, we have no idea what it's going to look like in Venezuela afterwards, right? It may be sound research tells us that maybe these are great companies to overallocate to, but that can't be done, in a weekend. That research can't be done in a weekend and a portfolio conclusion made with information that's not even been decided yet. So again, it just highlights the better approach is, to not have those knee-jerk reactions to something like that and try to trade some geopolitical event like this, which is highly, highly uncertain.
Yeah, and I mean, I think the big thing to take away from this, regardless of whether this is, compared to the close on Friday or open on Monday. I'm pretty sure it's supposed on Friday again. But basically, the big takeaway from this is if you piled into Chevron on Monday in reaction to that news, which is likely when you would be trading it, you've lost 5%.
Right. Yeah, absolutely. Even if you got your trade in first thing in the morning on Monday.
Yep. Actually, I would say especially if you got your trade in first thing.
Yeah. You're actually buying at the highest price there.
Yeah. So I think that's the big takeaway. Not that you might not recover it, because again, it can change things long term, and you can definitely make that assessment and make a case for it. But just a knee-jerk reaction, if you're going to do that and try to make a quick profit off of a company, just based off on a singular piece of news that's already broken, everyone knows about it. It's very difficult.
Yeah. Absolutely. Well, that was good context there. Thank you, Nick. Appreciate it. That was a good chart.
Yeah.
And good data.
Interesting stuff.
Yeah, very interesting stuff. Well, should we move on to our trivia? I have some geopolitical trivia for us here.
Oh boy. Yeah, I've got one.
Sounds good. Let me pick. I've got a couple here, but let me just pick a good one.
Yeah.
All right. I'll go first, if that's all right.
Yeah.
What major geopolitical event of the last 20 years led to the fastest market recovery?
The fastest market recovery. Past 20 years. I'm going to say Liberation Day tariffs.
That's 100% correct. Yep.
All right.
The tariff shock in 2025. That fastest market recovery.
That really was something.
It really was something. And it's interesting, I have a hunch. I'd like to do some more research on this at some point someday. But I feel like the velocity of the market is picking up with how fast news cycles are, the speed at which individuals can get access to information nowadays. I just feel like our drawdowns and recoveries, even when they're steep, it tends to be a much faster cycle than it has in the past. But that could be incorrect. We'll have to do some more research on that someday. But yep, that's the one. Liberation Day and the tariffs of 2025.
Nice. Yeah, that really is something to think about. How quickly that recovered. All right, I've got one for you. This is a fun one. All right, you ready?
Good. I am ready.
What is a food-related statistic that is believed to have predictive power for U.S. military activity?
Food related. Is it not sure. The price of no, that's food related statistic.
Maybe like food ordering. I guess food related.
Huh. The price of grain, something to do with the price of grains?
Maybe. It's quite possible. That's not what I'm looking at, though. I'm talking about the pizza tracker that tracks the ordering of pizza around the Pentagon.
Really?
Yes. And in fact, if you were watching the pizza tracker, you probably would have known something was up right before they captured Maduro.
Oh, really?
Yep.
Interesting.
There is
a
website
tracker to see how many pizzas are being ordered to the Pentagon.
Yes. The Pentagon Pizza Index, sponsored or supported by Polymarket. You can see this here, these are all of the main pizza places around the Pentagon that they like to order from when they're pulling a late night and needing to strategize. And in fact, it's really interesting to find the history of this because the Russians used this in the 80s. They were spying on these pizza places around the Pentagon because they realized that when the pizza orders really spiked, something happened.
That's hilarious. I did not know that. That's interesting.
Yep. And
makes sense though.
Yeah, apparently it spiked right before they caught Maduro. So
interesting.
Interesting. They've got other ones as well that are not as politically correct, but
yeah.
That's the main one, and it's got some precedent for having strong predictive power.
Yeah. Interesting. Well, that's awesome. Good trivia. Awesome. Well, that is, I think, all we've got for the week. That wraps up everything. So, first one of the year, first podcast of the year down.
Yep.
Absolutely. Well, anybody, let us know what you think in the comments, and we will be back next week, same time, same place.
Thanks, everyone.
Thanks, everybody.